Let me start recording. Shri Guru Bhyo Namaha. Om Shri Ganeshaya Namaha. In this session, we are going to see again the regular charity as an investment, continued from the previous video, with a real life situation also. Now, in this video, just like a previous video, the SIP starts at 200 rupees, 500 rupees and 1000 rupees, and SIP continued for 100 years, and the SWP starts for 100 years for future generation, for multiple generations. Say the investing for this set of 100 years and again another 100 years withdrawing, etc. One can one can form family trusts and invest in mutual funds. With 200 rupees starting in SIP, the maturity corpus in final fund value after 200 years could be 11,98,107 crore 24 lakhs. That is lakhs of crores. 200 again, 29 lakhs of crore. 1000 with SIP of 1000 rupees, that is 59.90 lakh crores. We will see the detail in this. Before that, a disclaimer. I am Brahmadesha Narasimha Venkataraman. This video presentation is for information, educational and estimation purposes only, and not recommend buy or sell, invest or redeem your funds. Every investment has its own associated risks, and without knowing the risk, don't invest. I am neither an agent, nor a broker, nor any advisor, simply an analyst with computer background. In the previous videos, we have discussed some SIP schemes and SWP schemes in inflow way, that is inflation protection. In this session, we will discuss about some SIP and SWP gross figures assumptions, entry age 1 and charity period 100. Step up during SIP is 5%. Step up during SWP, that is withdrawal time, is 6%. Rate of return throughout both SIP and SWP period is 12%. Withdrawal years from 101 years to 200 years. The SIP or charity period is from 1 to 100 years, and withdrawal is from 101 to 200 years. So this is also explained as current age is 1, end of SIP age is 100, and maturity age is 200 years age. As I told you, for this one has to make invest in form of trust only, not as an individual. SIP and SWP gross as charity. Say SIP, you put it as a charity with 200 rupees SIP, the retirement corpus after 100 years of the trust will have 510.89 crore, from which one can generate withdrawal of 2.66 crore up to 850 crore in 100 years per month. And maturity value of the 200 years comes to is 11,98,107.24 and odd crores. For a 500 rupees, the retirement corpus works out to 1,277.26 crore, which can generate SWP, withdrawal plan from 6.64 crore to 2,126 crore in 100 years, and keeping a fund value maturity to be 29,95,185 crore 76 lakh for a 1,000 rupees person. The retirement corpus works out to 2,554 crore, which can generate 12.28 crore per month as the SWP, and goes up to 4,252 crore per month in 100 years. That is from 101 to 200 years. And the fund value, maturity value is 59,90,382.75 crore. Instead of SIP, one can put it in a lump sum also and keep it for hundreds of years. In the first 100 years, it can generate a 34,000 rupees one-time money. There is approximately about 1.5 months salary of person. See, 200 rupees is for person. Okay, let us go to the previous one. See, 200 rupees SIP is for person drawing about a salary of 20,000 rupees per month. That is approximately 1%. 1,000 rupees per month SIP or charity is for person drawing about 1 lakh rupees per month. For a 20,000 rupees earning person, if he can spend about 34,000 rupees SIP, that is about 1.5 months salary, then in 100 years the corpus can be 521 crore 34 lakhs 75,006 or 521.35 crore, from which it can draw pension or the generation can draw the pension of 2.71 crore per month up to the generations, 2-3 generations can earn and go up to 867.76 crore and still live with a fund of 12,22,469 crore 96 lakhs. This is lakh of crores. Similarly, for 84,000 rupees one time wala, similarly 1,67,000 rupees. The person who is earning 1 lakh per month, and if we can put 1.67 lakhs as the one time money, in 100 years the fund can generate 2,560.74 crore. This 100 years figures and the starting SWP is the same as the previous video, no difference. Say 1,67,000 rupees one time investor can reap in 100 years. His generations can reap 2,560.74 crore or 13.31 crore as pension, goes up to 4,262 crore per month in 100 years, and leaving a maturity balance fund value of 60,04,981 crore 3 lakhs. These are equivalent to current value of 3.92 lakh per month of current value with SIP and and the final fund value is equivalent to current value of 52.16 crore. One can take the screenshots of these things and preserve and check up. A guess. Common man handling in thousands of crores. In 100 years, common man would be handling figures like 2,554 crore 55 lakh 20,558.79 paisa. It will be tedious to account it even in computerized ones. Therefore, in 100 years, the currency system itself will change, say with 1 lakh to be new currency paisa. Like counting always up to nearest lakh, say 2,554.55 crore for the above mentioned figure. Rounding or truncating less than 1 lakh. People will talk only in crores. Simply consider the year 1950 and now after 75 years. Statistics say only 0.01% of Indians, about 36,000 people, were lakhpatis in 1950. Now the rupee 1 lakh per month earner itself is around 0.02%, about 2.8 crore people. Similar stories will repeat in hundreds of years to come. Avenues for charity. There are plenty of avenues for charity, and within home itself we can have regular dhan at every Amavasya, new moon, remembering our forefathers, regular dhan every day, say by feeding a deserving person, dhan during Antyeshti or death time, or annual charity or Punya Titi of parents can be regular or one time. Regular dhan as a yajna to Deva Rishi Pitru Bhuta Manusya Yajna. Someone, Dr. D.A. Joseph Iyengar, see, this is Dr. D.A. Joseph, a Christian, and followed the tradition of Iyengars. He is a YouTuber. He has mentioned that dhan to be at least 1% of your earnings. Even if you think charity begins at home, spend on your children without any anticipation that the same children would help you or look after you in old age. Why 12% return? To make a profit, only industry and business are the ways. One can join the business by way of funding. Agriculture also is an industry and business. And that funding can be by equities in share market. Even though market growth is mainly due to ups and downs in the stock market, apart from technical fundamentals of a company, the integrity of promoters play a vital role. The promoters should know the value of money, and when they start up, they need finance. The finance came from donors like friends and public. The integrity of promoters should be such that they always remember how they tried hard to raise finance and look after the stakeholders. If they fail to raise funds, they leverage and pay as much as 22% interest on loans from banks and other financial institutions. Needless to talk about a Kandu Vaddi, which are varying from 24% to 100%. Let us not talk about that, but we will think of regular loans from banks and other financial institutions. Why 12% return? The companies are such that it can repay the loans of 22%, for which it earns more than 40%. Thus, after taxation, they are able to pay rich dividends. Suppose if they pay a dividend of 10% of share value, people who are satisfied with 2%, 3% yield or return flock the market to buy that share and raise the market value of the shares. In this process, the promoters are also offer their shares for sale. The integrity of the promoters be such that they rotate that gain on OFS back into the system, creating more industry, business and continue growth story, rather than the gain of OFS used for marriage and other family functions. As an individual, you may not be able to decide this from technical fundamentals. Mutual funds, through fund managers, play a very important role in deciding these parameters and help you earn 12% with a moderate risk. Therefore, I consider a return of 12% per annum per month. Have a faith that your present day regular and lasting a direct contribution to charity will yield results in your future rebirths or your generations. The fortune amount will be such that you will be able to continue the same 1% contribution in subsequent janmas also and cherish forever. From my own life experience, I can quote that I was not a cine goer at all, and someone insisted me to take my wife, who was pregnant at that time, to a cinema. In front of the cinema hall, an old lady was begging for alms. I had just 5 paisa coin as a change, and I asked my wife to give her. Incidentally, I paid around 30 rupees to ticket at that time for the tickets to movie, and this paisa, 5 paisa is too little compared to ticket. But in return, the old lady gave a big blessing that let the baby in her womb be safe and have easy delivery. I believe such blessings of the unknown only is responsible for the baby, for that baby today to be an IIT gold medalist and doctorate and earning handsome salary. A matter of fact continued. One may ask, if the charity can keep a man in rebirth happy, then why is the suffering? Religious preachers say that a man was taken birth in this janma due to sins and good deeds, having near equal proportion of a small bunch of actions done in previous crores of janma. So in this janma, he is supposed to be both happy and unhappy, and neither is permanent. The degree of sin will differ from person to person of having good virtues. For example, I realized that I lied too much, less degree of straightforwardness in my previous birth. I am not ashamed to say this, and hence suffered due to a long unemployment period in this janma. What sort of lie I told in previous janma is that I sang a bhajan saying, Bhajanam mama jivanam, ayyappa bhajanam mama jivanam. The lie part is that I was not leading a life in that janma only with bhajan. That is, I was not having my jivanam as my bhajanam. It was a hobby to say and recite and not actually practice. Hence the degradation of arjavam, straightforwardness, that is Speech, actions and mind are not in the same wavelength. This can be linked to the fact why Periyar Bhakts in Tamil Nadu call bhajan itself a lie. I am concluding this. Links of playlist is given in description box below. Once you practice at least for 3 years in mutual fund schemes, one can learn analyzing company fundamentals and venture into investing into equities in share market. Request viewers to subscribe, like, share to like-minded people. Link available in the description box. Thanks for watching. Let me conclude it. Let me stop recording.